I'm Jonathan with the Yukon Project, and we're going to do a deep dive on personal loans. What is a personal loan? A personal loan is a type of loan that is not secured by collateral, such as a car or a house. This means that the lender is taking on more risk when they approve you for a loan. So they will typically charge a higher interest rate than they would for a secured loan. Personal loans can be used for a variety of purposes, such as financial emergencies, debt consolidation, home repairs, medical expenses, or to buy something you couldn't otherwise afford. How do personal loans work? When you apply for a personal loan, a lender will look at your income, your credit report, and other information to make a decision on whether to lend you money, on how much, and at what APR. If they approve you, they will give you a loan agreement with all the details, including a truth in lending disclosure, which will give you the details on payments, term, and interest rates. How long does it take to get a personal loan? In the old days, you had to walk into a bank and sign paperwork in order to get a personal loan. But today, because of the standardization of credit reports, the internet, computer models, and technology, what it means is decisions are often made in minutes or even seconds. In fact, it will probably take you longer to gather the information to apply for a loan than the decision that will actually be made by the company. But of course, every lender is different, and some are automated and some require phone calls, or some have different data requirements. Of course, the larger the loan will probably require more steps. But once you're approved, it may only take a day or two to actually get the money, and it will drop directly into your bank account. Many short-term lenders can fund in the next day. Some can fund even in hours. Making payments is just as easy. Usually a lender pulls the payment out of your bank account through a process called ACH, or automated clearinghouse, the same process that you might use for auto bill pay services. What do you need in order to apply for a personal loan? When you apply for a personal loan, lenders will need proof of income, proof of your identity. They will need access to your credit report, and they need to know that you have a bank account. More and more lenders are also asking for access to that bank account because the information in that bank account shows your expenses and your income, and it gives them a better idea of whether you're going to struggle to make your payments. What does it mean to be pre-approved for a personal loan? Companies might use the word pre-approved or pre-qualified or even pre-screened, and they all mean roughly the same thing, which is that they looked at your credit file and thought you matched their criteria for lending. When I say looked at, that means they did a soft credit pull. It won't affect your credit in any way. If you apply, they will look harder and make a final decision. Even though you're pre-approved, you're not guaranteed to get the loan. It's possible that whatever happened between the time that they looked at you and the time that you applied, things changed. What are personal loans used for? Personal loans are used for all sorts of things, and sometimes it depends on the amount that you're borrowing. But the most common uses of a personal loan include financial emergencies, medical expenses, debt consolidation, home repairs, starting a personal business, or just general spending like vacations or large ticket items like furniture. How much can I borrow with a personal loan? Personal loans come in a huge range. You can borrow just a few $100s all the way up to $100,000. Not all lenders loan in that entire range, though. There are small dollar lenders that lend usually below $3,000 for a short period of time. They cater to people with a wide range of credit scores. Then there are lenders who offer larger loan amounts, like tens of thousands of dollars. Those loan terms tend to be 5 years or more, and they're reserved for people with a higher credit score, say above 700. What should you do before applying for a personal loan? Before you apply for a personal loan, I suggest you ask yourself 5 simple questions. How important is it that I borrow? Would my situation be worse if I wasn't able to take out a personal loan? Can I afford the payment? Do I have a plan for how I will pay it off, and especially how I will pay it off early? Do I have access to a better way to solve my financial emergency? By asking yourself these 5 questions, you give yourself a chance to understand whether there's a better way to get through the financial situation you're in than taking on more debt. How long do I have to pay back a personal loan? It depends on the terms, and those loan terms will be established at the time you take out the loan. But here's a rule of thumb. The higher the loan amount, the longer the term you have to pay it off. If you have a loan of over $5,000, it's very likely you're going to have 3 years or more to pay it back. Lower loan amounts are going to be shorter payoff. And that's especially true of loans of under $1,000. You might have only 9 months to pay that back. Is it hard to get a personal loan with bad credit? If you need a loan over $3,000, it's going to be really hard. And frankly, you probably wouldn't want that loan anyway. The interest rate or the APR would have to be high enough to compensate for the risk of lending to someone with poor credit. And frankly, that means that the payback would be so difficult. But if you're looking for a smaller loan, say under $2,000, it's very possible to get a loan like that, even if you have bad credit. But it's crucial that you shop around because lenders have different underwriting criteria, and you might be approved for one lender even though you wouldn't be for another. What is a typical APR for a personal loan? As you can well imagine, the APR for personal loans can be a wide range. In fact, the higher the loan amount, the lower the APR needs to be, even so that you can pay it back. But when we're talking about short-term loans or terms less than 2 years, if you have a good credit score, you can expect to pay less than 36%. But if you have a poor or damaged or you're repairing your credit score, you can expect to pay more than 36%. And for very short-term loans or for loans with really damaged credit, the APRs can be well over 100%. Is a personal loan a good idea? Obviously, you always want to be cautious about taking on new debt. But when is it a good idea to take on a new personal loan? Well, it's probably a good idea if it keeps you from more financial problems. If it's solving a problem and helping you move forward and not backward, it might be a good idea. But it's probably a bad idea if you're taking on more than you can handle, even if it feels like you're solving some short-term problems. Don't push today's problems into the future. How is interest calculated on personal loans? This can cause a lot of confusion because let's say you have a loan of $1,000 and your interest rate is 100%. You're not actually paying $1,000 in interest because you're only charged on the principal that you currently owe during the billing period. And that interest is calculated daily. So let me give you a crazy example. Let's say you have a loan that has a 365% interest rate. Well, you divide that by the 365 days out of a year, you would owe 1% interest per day on the outstanding balance. So a more realistic example might be a 36.5% interest rate. That would be a 0.1% a day interest. Let's suppose you had $1,000 that you still owed during the billing period, and you were charged 0.1% a day. That's $1 a day, which means that during that billing period, your interest expense would be $30. Is it a good idea to pay off a personal loan early? It is always a good idea to pay off your personal loan as early as you can because you will save on interest that is incurred at a daily rate. The only time it could be a problem is if the lender charges a prepayment penalty, and that penalty could cost you more than the interest for the rest of the loan. Now, I don't recommend taking a loan from a company that charges a prepayment penalty because you never want to encourage people to be in debt, and you want to encourage them to pay off early and as quickly as they can. Do personal loans help my credit score? Well, first of all, if the lender doesn't report to the credit bureaus, the answer is no. It won't help or hurt you. But most lenders do report to the credit bureaus. So then the question is, does it help? Well, this is kind of a complicated question because in some ways it can help. Making on-time payments contributes to a positive credit score. In fact, it's the number one thing you can do to improve your credit score. It also provides you a breadth of credit history. But it can also hurt you. If you miss a payment, it's absolutely going to hit your credit score in a negative way. The other thing that will affect your credit score probably negatively, at least initially, is obtaining new credit. Until the credit scores feel comfortable that you're handling the new credit well, you might see a small hit to your credit score. Will paying off my personal loan improve my credit score? You ready for kind of a frustrating answer to this question? Paying off your personal loan may not actually improve your credit score because credit scores aren't about your amount of debt. Credit scores are about predicting how you'll handle the debt you have. And when you pay off your personal loan, you're no longer making on-time payments to that personal loan. And on-time payments is the top thing about contributing to a positive credit score. Now, if your personal loan is also one of your longer forms of credit, paying it off might actually decrease your average age of credit, which also could negatively affect your credit score. But let's be clear. Life isn't about having a perfect credit score. Life is about living well and having the financial resilience that can allow you to live and do the things you want. So paying off your debt will always be a good idea. If you want to learn more about personal loans or how you can navigate the financial wilderness, head on over to the Yukon Project website. They have a bunch of great resources, as well as a marketplace where you can apply to many lenders all at once to see who will approve you for a loan. Thanks for watching, and don't forget to hit like and subscribe.